Jim, fam, today is February 16th, 2024. It's the first day of the rest of our lives, and we're thrilled that you're here with us, making it the best day yet. So we don't know how much longer this previous intro is going to be with us because ChatGPT has announced that they're launching a new service to convert text into video. So we would like to challenge all squids. If you'd like to earn 1 million squid points, then send us the best possible video intro that you can. We've gotten great for all of you. There's been a ton of activity, of course, as always, around the flywheel. And one person we've been really interested in getting on a Llama party to talk about both Convergence as well as like the rest of the stuff on the entire planet is Wireshark, the CEO and founder. Is that the correct title? Chief Shark. What's
Yes,
your
sir.
official title?
Whatever. Chief Shark. I like it. It's fine.
Chief Shark. Excellent. And then, of course, we got our regular host extraordinaire, Sam.
What's up, sir? How are you? Good to see you.
Doing good. Doing good. How you all enjoying Friday so far?
It is a great day today.
Yeah, always great.
All right, so let's go ahead and talk about the first thing. So I know that all of you are busy getting to work trying to get some Leviathan squid points, but there's other airdrop news about it seems. Convergence has taken a snapshot of VESDT holders. So why don't you go ahead and tell us a bit about what's going on here?
Yes, sir. So yeah, it has been quite a long time since we've planned to airdrop VESDT holder, as StakeDAO is the first protocol integrated within Convergence, so it just makes sense to airdrop VESDT holders. So it's going to be a locked airdrop, so eligible people will be able to claim a max time locked position on Convergence. And so far we've announced that we have 100 spot. You need to own at least 1000 VESDT to be eligible. But we may bring some changes to include a little bit more of StakeDAO participant in the airdrop. So we'll announce every detail soon. But yeah, that's the plan so far.
Maybe I'm the one out of the loop here. We talked about Convergence a couple of months ago, and I kind of had an idea of it, but maybe we could run through just so we're all up to date here on what Convergence is doing and how it fits into the whole Curve ecosystem.
Yep, for sure, sir. So long story short, we are the Convex of StakeDAO. So I don't know if you're familiar with StakeDAO, but basically they provide kind of the same service that Convex provide at top Curve. I'm gonna make it. And they do it for Curve, for Balancer, for Angle, Yearn. I mean, every protocol that you can boost with VE token. And the particularity is that with StakeDAO Liquid Locker, you keep the voting power of your token. So basically, with SDCRV, which is the liquid locker for CRV, you keep your voting power. And what you can do is that you can boost your voting power on the SD token if you own VESDT, right? And so you can boost your voting power, but you can also boost the vote incentive that you're receiving for your SD token. So what we do is that we basically socialize VESDT, just like Convex socialize VCRV, and we spread the boost, the VESDT boost, to all the users of the Convergence platform, and thus we can we boost reward for SD token, but also for liquidity providers, because on StakeDAO, liquidity providers earn SDT, and then it's the same story. If you have VSDT, you can boost your SDT earning on the LP position. And so we boost vote incentive earning for SD token, and we boost SDT emission for liquidity providers. So that's basically the main product of Convergence. So we just provide more capital efficiency, and we boost yield for StakeDAO users.
I really love them. I really love the meme that I don't know if it was you posted or somebody posted, but it's like the guy on the podium who like grabs the champagne, kisses the girl.
That was StakeDAO.
Yeah. Oh, that was StakeDAO. This one, I thought it was just hilarious.
Yeah, that's fantastic. This one was really, really funny. Yeah, definitely.
So StakeDAO got 10% of VCRV. That's pretty significant, seeing how the competitors of Yearn and Convex have been such dominant for last time. To be able to come in and become such a large part of the ecosystem is a big win.
Yeah, I think lastly they've been the liquid locker who probably locked the more CRV in short period of time. Probably would need to have a proper check though. But yeah, they're doing great.
Yeah, I'm pulling up the dashboard here. Could you talk a bit about how it is you picked StakeDAO of the protocols? Because like there's a lot of protocols out there that have VE tokenomics, and StakeDAO, like for people who follow the Curve Wars obsessively like me, like I'm super familiar with it, but like the average listener maybe who's just busy like farming on side chains might not have heard of StakeDAO. So how do you come across them, and why do you decide StakeDAO over others?
Because it was the most logical decision from my point of view. Like StakeDAO is already working with a lot of protocol, and by targeting StakeDAO first, it gives us exposure to all the protocol that StakeDAO integrated. And since no one made this boosting layer for StakeDAO except a concentrator with ASD CRV, it was like an obvious choice to pick StakeDAO as the first protocol that we would integrate, because it allows to target multiple protocol, and it allows also to bring quite an interesting capital efficiency to the already existing product. So it definitely made sense to start with StakeDAO. And also, like, if we would have gone for protocol who already has liquid lockers and stuff, we would have been fighting against a competition that would have been pretty tough. And so going via StakeDAO for the first one was kind of the easy choice, but also the most logical choice to start with. And so the next one is will be Convex, and for Convex we will have a quite different model than the one which is needed to aggregate V token based protocol. But maybe we can talk about this later. But yeah, StakeDAO was definitely the most logical choice, given the product they have, and given the fact that no one made a boosting layer out of StakeDAO. So that was definitely the logical choice on our side.
Yeah, we talked about the capital efficiency of using like Yearn versus Curve, or sorry, Yearn versus Convex versus StakeDAO a while back. And sometimes you get a better boost when you go somewhere else, and the optimization isn't always the best by just sticking with the largest.
Yeah, and that's the old point of OnlyBoost. So StakeDAO will soon release OnlyBoost, and basically OnlyBoost, when you deposit CurveLPs within StakeDAO, OnlyBoost will route you through the layer that has the best boost. And so depositing on StakeDAO will ensure that you get the best boost out of Convex and StakeDAO always. And this will be de facto integrated within Convergence. So on our hand, on Convergence, by depositing CurveLPs, you'll be sure that you'll have the best CRV yield. And on top of that, we boost SDT reward and we throw CVG emission according to our gauge weight. So in the end, we're still small, but we'll end up being the most efficient layer for CurveLP, and that will benefit all the underlying protocol in the loop, so StakeDAO and Convex. So that will definitely be, I guess, a nice flywheel where everyone shakes hands and we all work together, and that's cool, and that's everyone's happy. At least
any
that's
alpha on when OnlyBoost comes out?
I'm afraid I don't have this one, sir. But StakeDAO released like a governance post on the forum, and it should be coming pretty soon.
All right, because that's what they said back in August when they announced it. They said September, and I've been sitting here waiting.
Yeah, soon in crypto, right?
Yeah. Oh, there was a TM. I forgot that there was a little trademark thing.
Yeah. So if there is a trademark, you can complain, right?
So let's actually talk a bit about governance, because now that Convergence is live, it seems to be doing quite well. Disclosure, like I have a little bit of Convergence myself, and get some indirectly through my exposure to the Llamas. Quick shout out to the La Market for this gorgeous.
Hold on, wait. Nice. Like, no, go back. What is this? No way.
This is what I ordered off of the La Market, which is unaffiliated.
How come that's not up on the wall?
Because behind me is some paper blinds, so it wouldn't really fit. I need to like move to a different room in the house to get a like proper recording studio set up. But
is that like? Can you show that again? Let's see it. I thought it's a beautiful picture. Hey, that's your llama, isn't it?
This is my llama, a custom gorgeous llama provided courtesy of the Lamarket. So check out LLAMARKET.
And they do custom llama prints.
You have to own the NFT, otherwise they will not be willing to help you out.
That's pretty cool.
So big shout out to them. They're not affiliated with the llamas, so don't be fooled. But yeah, appreciate the comments rolling in. People are enjoying that. Anyway, let's talk about governance, because you are now involved in governance, right? So
yes, sir.
Let me pull up the screen here. You were chatting a bit this morning, and Sam, can you take it off me and do it to my screenshot?
Oh, yeah, this one?
Yeah. Yeah, so this is you asking to lobby the church. So just go ahead and read it out that you're officially incentivizing the ECRV voters. And as Sam was talking about, like, governance, it's always kind of like tricky once you actually get into the process of like, which pools do I incentivize, etc. How do I do it?
Yeah.
What have you found out through this process of like actually trying to like go through governance and incentivize liquidity?
Yeah. So that's the first time we were doing this. That's basically part of our protocol on liquidity strategy. So long story short, the goal is to incentivize our LPs. And since we own currently most of the liquidity, idea is that the treasury will collect reward, and then rewards will be distributed back to people who hold YSCVG, which is one of our locking primitive, which is yield bearing, that pays holders with Curve ecosystem asset every 3 months. So that's basically part of the goal in our treasury management strategy, where we combine protocol on liquidity, vote incentive to bring a reward to our pool, and then distribute back those rewards to token holders. And if you want some in touch about the long-term strategy, so basically, so we have bonds also to grow the treasury and issue tokens. So we issue bonds instead of doing classic liquidity mining. And basically the idea is to incentivize voter until we have a big enough stack of governance token to vote ourselves for our liquidity and still collect reward and distribute them back to token holders. So that's part of the strategy. We'll see if how the bribes, the vote incentives works, and if needed, we'll push a little bit more before the end of the period to be sure to get our vote. So yeah, that's the first vote incentive round from us, and it will continue. That's part of the strategy internally in the Convergence governance. We've voted a budget that basically allows us to spend 20k CVG weekly for vote incentives. So this first round for us is like 20k for 4 weeks. So we can still throw more according to what has been voted. And so yeah, that's overall the strategy, incentivizing LPs. So obviously it should bring more LPs. We may not end up being alone on the pool and collecting all the reward, obviously. But still, as far as the treasury is getting paid for owning its liquidity, that's the goal behind this strategy.
All right. Let's go ahead and take a look at these bonds you're talking about. So I'm pulling up the Convergence.finance website, and
sorry. Sorry. Yeah, legal obligation.
But I don't understand this.
Sorry,
if Convex Curve all open to burgers, how come no burgers for Convergence?
Yeah, I know. I'm the first one to be sorry about that. Well, I'm not supposed to say that people can use VPN, but well, I guess I'm saying it anyway. And yeah, there was some obligation from our legal officer, and since we are, it's no secret that I'm based in France, so is the company, and so we have like a pretty. You got to be in line with all the directives of the regulators and stuff. So that's why. Yeah, sorry for this.
Oh, no hard
Jail.
feelings.
There we go. There we go. Yes. I will say that like your lawyer's always gonna like defer to the worst possible scenarios. And
yeah, I prefer some people being mad than me in jail, right? So
I guess at the end of the day,
sense.
I prefer to be mad than have you in jail too. So, can we talk a bit about the kind of dual token or not dual token strategy? You actually have like now 3 tokens. And part of this is because you also want to like split up protocol revenues as well as governance functions within both StakeDAO and then governance functions within Convergence. Like now that the Convergence token is live, what are the kind of like actions that you're seeing or activity around this kind of 3 token model?
Yeah. So first of all, MGCVG is not active yet. I mean, obviously it exists, but it's not usable yet as the meta governance still didn't start. So we'll communicate soon about that, and the Gauche vote on StakeDAO will soon start. But currently, so we have VCVG and YSCVG, which are usable. And pretty surprisingly, we have more VECVG than YSCVG. So what I was expecting more CVG being locked to YSCVG, which is the yield-bearing primitive. And especially since the APR is still like ridiculously high. Currently, it's like above 400% APR, which is 380%, sorry. Which is quite huge, but still we have more CVG locked for VECVG than we have for YSCVG. And so yeah, VECVG is live. You can vote on gauges, and YSCVG. So the first reward distribution will occur in 10 weeks now. So yeah, quite surprised that we've got more CVG locked for governance than for yield. But that's a good thing because it doesn't dilute much the yield of YSCVG, and it's still very attractive. And yeah, if you guys want me to talk about the rationale behind this dual locking model, idea was that okay, most of people, I mean retail people and small investor, usually they not really interested within governance, and all they want is basically the yield. While biggest entities such as, I don't know, it can be like funds, it can be protocol, it can be whatever, they may be more interested in governance and directing emission, and thus choose the governance primitive that we have. So the goal with this design was to align as much players' interest as possible, while making the old model so that more token get locked, obviously in theory. And so that's why we've adopted this model where when you lock CVG, you can choose to lock for either governance or yield, but you can also lock for both because you can go 50-50, you can go 80-20, 100-0, 100, whatever. It's up to you. And so that's why we have this dual token model, where we basically split the governance from the yield.
Gotcha. Can you give us any alpha as to which protocols you're going to be expanding to next, or are you just focused on StakeDAO? I know when I was researching it and reading a lot of the threads, the company to launch, there was some speculation as to other protocols that be kind of like ripe for this model.
Yeah. So the next one will be Convex. This is like official, not official, right? But that's what we've been working.
You're going to be the convex of convex.
Yeah, but like the model will be a bit different because we'll actually boost convex yield. And how we're gonna do this? We're gonna do it the following way. So we're gonna plug a Civics liquid locker. So this is pretty classic. We already have some of those. But then what we're gonna do is that we're gonna create liquid lockers for Frax LPs max locked on convex. So it's gonna be a convex Frax integration. And basically on Frax, you have 2 ways to boost your reward. Either you have VFXS, but you can also lock your LP for up to 3 years. And from what I saw, people are not really inclined to lock LPs because it's kind of different than locking governance token. So yeah, the idea is to create a liquid locker for CVX. and liquid locker for Frax LPs max locked on Convex. So that's the idea, and by doing this, so we'll need to maintain a liquid locker per staking pool. So obviously we're not going to plug every Frax pool right at the beginning. We'll go little by little. And by doing this, we'll let people enjoying the max yield possible from Frax LPs deposited on Convex. So that's how we intend to work the old stuff. And then with that model, we'll apply what we're doing with StakeDAO, the combination of protocol on liquidity and liquid locker. So basically, for StakeDAO, for example, what we're going to do is that we own most of the CVG SDT liquidity. So we're going to farm reward on that, and half of the reward farmed with this liquidity will be sent back to the liquid locker, to the single site staked liquid locker. And so we'll do the same with Convex. So by owning the CVG, CVX LP, we'll collect reward. Half of this reward will be sent back to CVG, CVX to boost the yield. Then obviously we'll take some fees on the boosted LPs to distribute them back to CVG, CVX. And that's how we intend. I mean, on the paper, that's probably the model that will give the highest APR for CVX liquid locker.
So that's MD in the X live stream chat is asking about SD Wi-Fi.
Yep, just waiting for them to move Gauche vote on chain so they can have vote incentive market. And as soon as SD Wi-Fi is boostable, it's going to be plugged on Convergence, and we're going to plug urine pools as well. And that's one of the benefits of working with StakeDAO, as I said earlier, is that we can target many protocols. And our intent is to also integrate pools from Pendle and Urine Finance first. And then maybe we will extend to also Balancer and Gold Extra. But the focus right now for integrating LPs from other protocol than Curve, it's on Pendle and Urine, indeed.
Nice. Anything else around the Convergence ecosystem that we haven't gotten a chance to talk about or plug before we move on to talking about broader crypto stories?
The yields are significantly high right now. I was just looking before we came on the episode. Don't put me in jail, Gary. But I was looking, and right now, I believe it's like the V Convergence token is getting like 300% APR. Is that right?
Yeah, that's it.
Pretty crazy. Also, a lot of the LPs as well too are getting pretty high APRs as well too. Sir, none of this. Feds are gonna kick in my door.
Nice one.
There we go.
Actually.
That's the right one. Yeah.
Yeah. Anything else you want to shout out about Convergence?
Maybe about Tangent, because I saw that our fellow Robodin is asking in the chat. So yeah, Tangent is a side product we're working on, and hopefully it will be live as soon as possible. And if you guys have some question about this one, I can answer as well.
So just so people know, I can't even access the Git book for Tangent. That's how overly compliant you are. So at least one of us here is not going to jail.
Can't even get the Git book, sir.
But someone. Words. Yeah, someone was able to read it, presumably not an American.
So what does Tangent do?
Yeah, so that's a DEX built atop Curve Finance. Oh shit, this is really annoying. I'll see if we can do something for it, because that's
fine.
Really cool, actually.
I prefer not having access to dangerous ideas that could spread misinformation.
All right, that makes sense.
I don't even know what self-custody means.
But yeah, long story short, for Tangent, that's what we call an exotic DEX built atop Curve Finance, and it works without liquidity pools. And it's powered by Curve Finance Oracle. So basically what we do is that we use the oracles that are embedded in Curve LPs to settle trade. And basically it works the following way. So makers can propose order to the market. Like, for example, I sell Bitcoin against ETH or USDC or CRV or FXS or whatever. And what Tangent will do is that it will use the difference of prices between CurveLP oracles to actually price the trade in a way that artificially generate an arbitrage opportunity for the taker. And so what it does is that it incentivizes takers to execute existing orders. So that's, I would say, a non-orthodox way to settle trade. But in theory, it works. We've tested it. It works. And so, yeah, the idea is that Tangent will eventually behave in symbiosis with Curve, because what we witnessed from the test we've done is that it will drive prices toward what we call price scale in a CurveLP, which is the area where basically the liquidity is the most concentrated. And so that's the price area where the pool is the most efficient. And Tangent will tend to drive the prices in this area. And afterwards, we intend to plug a bond as a service marketplace on Tangent so that anyone can use our bond technology. And in the end, we also have a design for an option market, so put and calls, fully permissionless, fully on-chain, and also powered by Curve Finance Oracle. So yeah, a lot of stuff coming for Tangent as well. And hopefully we will soon be able to release the white paper of the pricing engine. But so yeah,
but Americans.
Yeah, I'm gonna send it by email to you, just to you.
Oh no,
So
I'm
you
going
got
to
it.
prison. I'm an accessory.
Yeah, Gary's protecting. I know.
Just thanks to IW for bringing us this information, by the way. We're getting some shout outs for IW in the chat, Hero and Chad, and remember to vote for IW during the upcoming Ignitor round. So Wireshark, please stick around because we'd like to get your thoughts on some wider stories within the world of cryptocurrency. For the next big one, I wore off another real world asset for this one. I got this fantastic shirt for making a donation to Coin Center because here in America we have to actually pay for certain things. And the big story for the past week, in my opinion, has to be we held a Llama party last week. We talked about Bitcoin, and since then the price has shot up from about $47,000 to $52,000. So, of course, if you're asking why is it, it's not just the Llama parties that's making it happen. As you can see, the ETFs have taken in just the past 4 days over $2 billion in funds, with yesterday being the 13th being a very big day with 631 million. It's only been bigger since there. If we take a look at the net inflows versus outflows, the immediate aftermath, right after the Bitcoin ETF launched, there was also a bunch of GBTC selling. I don't know if the timing with that was coincidental or if it was kind of somehow intentionally correlated to allow for the ETF to look like a failure. But since then, it's been all inflows all the way. The outflows have almost discontinued. It's probably going to have some repercussions on other things. Some people are looking at U.S. stocks. Nothing on here, of course, financial advice, but Coinbase has been seeing a lot of attention lately. What are you guys' thoughts on this? Does this mean that the bear market is officially slayed and it's bullish again, or is this just a bull market for Bitcoin ETFs and it's not going to spill over to the rest of crypto? What do y'all think?
I mean, it always spills over, right? I mean, that's just how it goes. I mean, Bitcoin goes up, people have liquidity. Well, Bitcoin I mean, first, that's always the thing, but something like that, yeah. But typically, when BTC goes up, people have more money to borrow and then go gamble on alts, right? That's kind of what collapsed back in 2022 is when Bitcoin went down so much. I mean, the amount of lending that was taking place just completely collapsed. All the debt ran out, and but now we're back. Now we have the institutional bros coming in and pumping our bags to heights. I know.
They will though. Not financial advice.
Thankfully, we have better Bitcoin people since we're we're Bitcoin aligned, but we don't live in the trenches. But Nick Carter had a really nice post the other day, just talking about some of the observations. It's talking about like ETF flows are the most bullish things. Apparently, like BitVM. Have you guys looked at that? Some open like optimistic rollups built on Bitcoin be live in 2024. You know, we talked to the Botanics guys a while back. They're building a rollup on top of Bitcoin, and I think there's some other teams as well too that are doing that. So I don't know. Maybe we get some OP stack on Bitcoin at some point.
Yeah, are you familiar with Stacks, which is the Bitcoin kind of DeFi protocol?
Yeah.
How does it work exactly? Like I've seen this since quite a long time, but I have no idea how it works.
It's essentially what, like, you know how original Polygon was set up, where it wasn't actually like an L2. It's more like an L1 that kind of was adjacent to ETH, and then there was a bridge. That's pretty much how Stacks works. It's its own system. It kind of like sits adjacent to Bitcoin, but it's not a true L2 that sits on top.
But it's getting a little bit of hype and buzz. So here I have the Bitcoin chart up, and Stacks has been running up just in the past couple of days against Bitcoin. So it seems like there's been some interest in that. I have a little Stacks, full disclosure.
Have you ever used it before?
So I set up like my wallet with them like some years ago, and I haven't looked at it since. So I might not have any anymore.
So I don't know if they've changed it, but previously it would take 10 minutes to make a transaction on Stacks. It's really annoying. They may have solved that by now, but you would like fire off a DeFi transaction, and then you have to wait 10 minutes for it to finalize.
I guess that's just
how did they come up with that stuff? How do they even come up with that stuff? You know, a DeFi transaction that lasts 10 minutes. I know how I feel when I'm waiting to see the money passes from on some kind of a bridge, and it takes like 5 or 10 minutes. So
can we talk about the best ways to get exposure to Bitcoin?
Please.
It's the try crypto pools.
That's how I like it, to be honest.
Yeah.
So if you're not familiar with it, Curve has these V2 pools that anyone can launch their own. So you could put any 3 assets in there that you like, but the flagship one from Curve was Try Crypto, which contained a dollar coin, a Bitcoin wrapper, and then Ethereum. And since then, they've added like different ones. They had like LSDs and stuff like that. There's even a new Try Frax one, I believe, which is Frax. Frax ETH and WBTC that's used, or TBTC.
That is true, and it's earning 40% right now, fully boosted.
Nice. So I like these because if you ape into it, then you get the yields, as well as if crypto prices go up. Usually, like Bitcoin and Ethereum go a little bit together. So you get some of it, but you also like have the dollar, so it's like not quite as volatile.
Yeah, that's why we've been holding with the treasury, the 3 Llama position for a long time until we launch, because we obviously need liquidity. But we've been holding the 3 Llama pool for quite a while before going into production mode for the treasury, and that's exactly because of what you say, like because it gives you exposure to Bitcoin and ETH, and still lower the volatility with the dollar part of the triples. That's a way to expose yourself to the market. Yep, definitely.
Yeah, but to be honest, to keep plugging the Curve ecosystem, if you are a Bitcoin holder and you just bought some Bitcoin and don't really know what to do with it, the thing I would pitch is that you take a look at CurveUSD, because they have a few lending markets involving some Bitcoin wrappers. So you pay about like 7.5% borrow rate to be able to convert your WBTC into CurveUSD. But it comes with some features that I think are super friendly for Bitcoin maximalists. So a lot of lending protocols will just flash liquidate you if you get a little bit too close to the sun, and your price, if the price dips. With CurveUSD, it's got the soft liquidation, so it's like perfect, because if you got too greedy, took out too much, and Bitcoin price like dips, which it tends to do from time to time, you don't get liquidated immediately. You could sit, depending on your kind of like risk tolerance, for like anywhere from like a week to a year without having to repay. And if you repay, you could potentially sit for a really long time. So it's what I'm doing with some of my Bitcoin. It's I find it very friendly. And then once you have CurveUSD, you could use that to access like any variety of DeFi pools, because so much of DeFi is denominated in USD. So /plug is over.
Yeah, no, the design of CurveUSD is such an elegant design, and I'm actually quite surprised. I said this once in the Curve chat, like it's surprising that no one forked it yet. Like it, I'm not aware of any fork of the CurveUSD
Me neither,
design.
and it's like Mitch gave people 6 months to implement this, and then he said, "Okay, if you guys don't do it, I'm going to launch Llama, and basically that's coming
That's it.
very soon."
Yeah.
TM, and it's interesting
Llama
because
Land?
they're not. Llama is the kind of Curve isolated lending markets built off of the same code as CurveUSD, but the difference is instead of just minting CurveUSD directly, which is what how the CurveUSD gets into the market, it works kind of a bit more like Aave and Vaults, where you like supply an asset and you can borrow against that asset. So
What's going to happen with
it doesn't.
Silo?
As far as I know, Silo will continue working. I think there might have been some loose irresponsible talk of like maybe even integrating this kind of new Llama Land into Silo's interface. I don't know if that's confirmed or if I just like spilled any alpha there. I may have, in which case, don't throw me in prison, Gary. But what's interesting about it,
it's Mitch, man, like it's gonna be out for you.
well, if Mitch might just throw me in like a closet in his mansion, so I think I might be able to live with that. That's probably larger than my house. So yeah, not the worst prison in the world to be in. But what's interesting about it is it's like, as far as I understand, like Llama Land, the primary purpose of it doesn't like have any extra like fees on top. It's just to allow, it's basically just to allow like more usage of CurveUSD, which is good for the Curve ecosystem. I'm a bit curious to see your guys' takes on this tweet thread, which came out from Prismatic Capital. They just did this like financial analysis on how they are projecting CurveUSD's to basically grow over the next 5 years. So they talk a bit about the soft liquidation mechanism, and they look at the existing collateral markets and try and run some linear regressions on what they think is going to happen with these markets thus far. They point to a few different possible.
Wait, are those? Is that the growth? Go back up. Oh, this is the bull case.
Yeah, so this here is where they outline what they see as the bear, bull, and base case for what's likely to happen for CurveUSD across 5 years. So they say that the TVL in the kind of bear case would be, here, I have it right. There's like a full chart right here. The bear case, which you can see at the bottom, is that in dollar terms by year 5, there would be just under $1 billion. And the bull case would be in 5 years that it hits the 3.5 billion, with their expectation being they hit somewhere around 1.5 billion. What do you guys think about this?
Seems low. 3.5 billion. Seems really low.
Yeah. Realistic, but low, I think, yeah. Because like CurveUSD is quite young still. And it's, I mean, from my perspective, it's obviously probably the best way available now in the market to actually leverage against Bitcoin or ETH or whatever. So I'm actually expecting more in 5 years. Yeah, probably more.
Yeah, I think I'd agree with you. I don't want to like throw shade on it, but financial analysis, especially about the future, is like really, really tough. Even about the past, it's subject to interpretation. But with crypto, I feel like we see these like super wild swings. So their analysis assumes that the price of Ethereum will be like, I think, $5,000 in 5 years, which it could be. I would expect that Ethereum might be closer to $25,000 in 5 years, in which case, like everything in their scenario would be multiplied by 5. So I think if I were taking a attack at the way they did the financial analysis, instead of doing the linear extrapolations, I think I'd probably use something more akin to like a Monte Carlo method and come up. I think you'd see a much wider range of potential outcomes, just extrapolated based off of prior past daily growth changes. But you could see just in the past couple of days, CurveUSD has shot up from about 90 million to about 140 million. So if you're talking about things that can fluctuate wildly in the course of days like that, I feel like the 5-year projection is going to be a little rough. But still, kudos to them for, you got to set something out there so internet reply guys can tell you that you're wrong, right?
Yeah. What was the reason for the big peak over there? Like the recent 50 million uptick with the CurveUSD supply? Just the recent bull market vibes of the last few days?
So probably something related to bull market vibes might be a lot of it. There's been like some pretty hefty WBTC mints that I've seen, including like one person that did like I think 20 million or something in one single go. One other effect I'd say is just if you look at the let me pull this back up. If you look at the rates are like not too bad relative to how they've been. Let me just swing in the WBTC market, and you can kind of see that it's like at a relative low. A few weeks ago it was as low as 2.4%. It's starting to creep upwards. But in particular, the price of CurveUSD has actually been slightly above peg. So it kind of floats anywhere between like 99 cents and $1.01, usually slightly below, at which point rates spike. But because we've seen a lot more CurveUSD supply finding its way into liquidity sinks, we've seen a lot more like when less fluctuation in price, and the price can tend to like be a bit more towards the higher side there. So that's things like Conic Finance is relaunching, and they're serving as a bit of liquidity sink. A lot of L2 and side chains. Any CurveUSD that's sitting on an L2 is off the market, and not off the market, but it needs to be bridged back if it's going to get burnt. And because now there's 40 million CurveUSD on side chains, is pretty good.
Can we talk about how much revenue there would be, like with $3.5 billion worth of CurveUSD?
It'd be pretty nice, right? Like, so even at this kind of early stage, pull up the revenue tab on the great Curve Monitor site here. Even at this early stage, I believe that CurveUSD revenue is already flipping trading fee revenue, or it comes very close, right? So
that's insane, you know. That's really insane. Like to have such a new product be that efficient to the entity issuing it. That's amazing in such a short time, without even us feeling that CurveUSD is already like proving its a big success, and already you say that it's responsible for more than half of the profits generated by Curve.
I mean, it's understandable. I mean, like trading fees get pushed down. It's a very competitive market. Everybody's like, especially at the stablecoin swaps, like they get pushed down. There's a lot of like 0.01 fee, like 1 basis point pools, and also like 3 and 5 basis point pools. So, I would expect the swap fees to compress, and lending fees is where you make.
Yeah, it's like lending fees for the bear market, and the bull market, you make more money as like more money flows into DeFi from the trading fees potentially.
Yeah.
So you could always kind of come up with the back of the envelope number for what it would make if you assume that like the average borrow rate is, let's say, like 10%, and there's 3.5 billion CurveUSD, then that would be 350 million. 350 million
in revenue
per year in revenue.
Wow.
Yeah.
How much again?
Pretty amazing.
If you're just saying 10%, then 10% of 3.5 billion, 350 million.
Well, I don't know if it would be that. Maybe it's 5%,
Yeah, in which case you'd cut that in half. 100. Yeah, I could still sleep pretty well with 125 million.
Still pretty good. I mean,
yeah, we can even imagine a world where
what a good picture to put in.
We can even imagine a world, I guess, where collateral for minting CurveUSD are not just crypto native, but maybe RWA, or maybe it would need to be like another stablecoin to not being mixed with pure crypto-backed stablecoin, though. But I guess the Llama model would work with other asset than Bitcoin and ETH or other very crypto-native stuff, right?
Hey, that's actually a really good segue to something else I want to get your guys' opinion on, which is, have you been following at all the let's call it the decentralized stablecoin wars just a little bit further? This is the latest salvo from Prisma Finance, which is Prisma Finance recently launched about 6 months ago MKUSD, which was essentially backed by liquid staking tokens. So this would be, you could lend, for example, Frax, ETH, or WSTETH, or any token that's earning tokenized Ethereum earning yield. And since then, the big narrative has been liquid restaking tokens, where you basically stake an eigenlayer, your staked Ethereum, and then earn extra yield or points or whatever on top of that. So liquid restaking tokens has been a pretty hot narrative. There's several billion of that. And Prisma Finance decided to launch a separate stablecoin called Ultra, which is going to be only backed by liquid restaking tokens. Now, the reason that they decided for using liquid restaking tokens as a separate stablecoin instead of having it contribute to make USD was that they thought that it, for one, it would be like different types of collateral assets means slightly different parameters, so they might need to juggle different collateral backings to be able to do it. But then on top of it, there is just like the segregation of these funds. So if something happens to an LRT and ultra collapses, then MKUSD would be safe. So given that as context, first of all, what are your thoughts on Prisma's strategy here? And second, do you think that, for example, CurveUSD should take liquid restaking tokens and allow it directly as backing for CurveUSD? So 2 questions for the panel here.
Wireshark, you can take it first.
Yeah. I think we should probably wait a little bit for CurveUSD, since thing would be mixed up with Bitcoin and LSTs for ETH. But regarding Prisma, I think they definitely choose the right strategy for expansion on LRTs, because as far as I know, they will probably be the first protocol to allow you to borrow against LRTs. So first mover advantage, obviously, and separating Ultra from MKUSD is definitely the good approach, in my opinion, in terms of risk management. Right? They already have a working product, which is amazing, and we still don't know, is there real risk with LRT and stuff. So separating the two product was the obvious and logical move, in my opinion. So shout out to Prisma, very great stuff, very reactive team, and they obviously, in my opinion, taking the right way for working with LST. So super excited to see Ultra in action.
And how good are their videos, by the way?
Very good, very good.
No, you're not getting the sound, I hope.
Yeah, we got the sound.
Oh, okay.
Yeah. Shout out to the Prisma CGI team. Yeah, working hard here.
They got good marketing, honestly.
Yeah, I think Robo has a good comment here, is that ABS Sir.
Whoops.
Sir.
Good music.
I know. ABS rewards are going to be good, but people don't understand the higher slashing risks. One degen LRT is going to nuke so many validators. Probably. And that's the risk, right? And so I would assume that all the existing lending markets will take their time in kind of opening up lending markets for LRTs.
I was trying to find a meme about a photocopy of a photocopy of a photocopy, right? You copy something so often and eventually it just degrades to nothing. I feel like that's what we're going to see with all this talk of restaking and everything.
Yeah, I'm waiting for LRT, liquid restaking token, because I guess it's going to happen. I don't know how and why, but I guess it's going to happen.
It has to. Therefore, someone's going to be first, right? Who in the Leviathan audience is going to build it?
When does it stop? When does all that stop? You can always put another layer on another layer on another layer.
Well, I won't take position on this because I'm not considering what we're doing at Convergence, I'm not sure I have a word to say in that.
But at least you guys were with you guys. It was kind of cool because, to be honest, I think that people were sleeping on that third layer over there. And you guys were okay, if no one's going to do it, we're going to do it first. And seems like it's worked out pretty well so far.
Yeah, agreed.
Speaking of the stablecoin wars, so one of the things that people try and are really pointing to is this kind of competition between Prisma and the original, which is Liquity. So Prisma originally forked from Liquity, and Liquity themselves announced their own innovation this past week, which is their take on Liquity. I think it's V2. I don't know if this is directly V2 or not, but this is basically slated to be released in the fall. Yeah.
Well, we're actually going to have Colin Platt on from Liquity to talk about this next week. So,
when?
Let me take a look. I was speaking with him last night, and he hit me up.
Nice.
He's coming on Monday.
Nice.
So Pretty
Finally, we're
excited.
gonna be saying, when's the weekend gonna end so I can get back to crypto stuff.
I thought this was really interesting, honestly. So what they've done is they've split off the they've separated redemption and then collateralization. So in Liquity V1, collateralization and redemption are kind of tied together. So the first people that get redeemed in Liquity V1 are the people with the lowest collateralization rates. And this is like, it's not that capital efficient, because if we look at the Liquity CR right now, it's up in the 300s. You know, they're allowing people to mint out LUSD with a 0.5% cost, like upfront cost. And it has a very low interest rate. And so people abuse this to try to take advantage of farming opportunities and also higher interest rates. But what it did is it pushed the collateralization ratio up super high, and it's led to a very large outflow of funds from LUSD as people get, like, they don't want to be redeemed with a near 400% collateralization ratio. That means, like, you're putting up like $400 worth of ETH, you can borrow out 100 and you might get redeemed, and you might lose that $100 worth of ETH that you posted up. It's not the best. But here in V2, what they've done is they separated the redemption and the collateralization. So collateralization still works the same, right? Still has the normal LTV values. But the way that redemption happens now is that the TROs, if they're going to call it that, with the lowest interest rates get redeemed first. And I think this is actually kind of smart, right? Where if you're borrowing LUSD at like a percent, right, somebody should probably redeem that because it's too low. But if you're borrowing at 6 or 7%, that's probably a little bit better. And so this is going to help really set better market rates for what interest rates should be. LUSD doesn't actually have to figure out what those rates need to be or have any sort of like governance like Prisma has to adjust the interest rates up or down, the fee rates. And so, you know, this, again, they're building a very interesting system where it's very hands-off. They'll deploy the contracts, they'll be immutable, and they can just run. So I think the separation of both collateralization and redemption is potentially could be a game changer for Liquity.
Yeah, I also see some people like really excited about this new design. Should definitely be interesting to discuss.
We're going to talk about it on Monday. So everybody that's listening, please tune in on Monday. We're going to have Colin Platt here. We've had him.
I'm gonna text a friend right after the episode is done, because he'll be happy about it. He literally sent this post to me yesterday, and he only sends stuff when it seems serious.
And all of you should do the same. Make sure to share the show with your friends, subscribe, retweet it, share it to everyone. Before we wrap up, let's talk about some fun news here. So this was recently within the state of Massachusetts. They decided to fly a flag over the United States Capitol in honor of Satoshi Nakamoto. And the person who signed off on this was Senator Elizabeth Warren, the chieftain of the anti-crypto army. So I'd mentioned earlier in the show, I donated a little bit of money to Coin Center and got this nice Bitcoin shirt. What someone did was they made a small donation and was able to get the flag to be flown over the U.S. Capitol for kind of like a nominal fee. And, you know, Elizabeth Warren may not like crypto, but she really likes campaign donations. So she was willing to set aside her hatred in honor of Satoshi Nakamoto. So you might say that it's like a nothing, but we've also seen in the past week one of the Fed governors came out and said that DeFi could actually boost the dollar's global strength. So I don't know what you guys think, but I'm kind of feeling bullish. I feel like the kind of anti-crypto sentiment in Washington, D.C., maybe it's being tamped down a bit, and maybe people are starting to come around to cryptocurrency and DeFi, and maybe soon we'll be able to read the Convergence documents without having to go through some sort of illicit activity.
Yeah,
what do you
hopefully.
guys think?
Well, I'm just waiting for the Federal Reserve to incentivize Curve voters, and that would be that would be something good, I guess.
Well, they are through PayPal and the.
Well, yeah, actually, yeah, they are actually. Yeah.
That's true. Indirectly, yeah. No, it's actually, pretty bullish news, in my opinion.
I think that. I don't know, at least from where I'm sitting, it definitely looks like that this is becoming a bit of some kind of a partisan issue in a way. No, it definitely seems like the left is much more against cryptocurrency than the right. But feel free to correct me if you think otherwise.
I perceive the split to be more old versus young, but I'd be curious what other people think.
I think there is still like left and right like disagreement regarding everything that is kind of libertarian, anyways. So yeah, young, but also left and right from my perspective, at least.
So, in my opinion, like the right, the political right side of the map kind of sees that as an opportunity to get some, in my opinion at least, some of the voters' opinion who are like, who this is a very big issue for. Because to me, it definitely seems like that the side that's attacking crypto much more often is the Elizabeth Warren side of things. At least that's what the timeline shows on my side.
She also happens to be very old. It's not a knock against her. She looks very good for her age. Like, I hope I look so good when I'm at that
Definitely.
age.
God bless her.
Friends, do you guys have big plans for the weekend? Or are you going to be hard at work, chasing Ponzi schemes, trying to earn some points? What's your big weekend plans?
Touching grass.
Yeah, Shabbat, man.
Shabbat is starting here. Yeah.
Well, everyone, before you touch grass, make sure, again, share the show with your friends. Subscribe if you haven't already. You can find us on several different channels. We have our Spotify channel. We have our YouTube. We have our Telegram. We have our presence pretty much everywhere. We're adding on to Discord, so be on the lookout as we relaunch our Discord and get everything going there pretty soon.
Oh, and let's tell people about the people who don't know yet about the Squid Cave. I just found out officially yesterday, to be honest, but I see it growing, and it's actually kind of cool. Come and talk to us over there. We have another TG group for the community.
Yeah, you can find that through our kind of main announcements headline channel. Periodically, we post the link to the Squid Cave. It's got a lot of good people in there, a lot of discussion on some of the newest headlines, and some more information about these Leviathan points. We're one of the largest points programs in all of DeFi. So
already saw some WEN token requests on the community. So it looks like we're going in a good direction.
Oh, busted. They got us. They got us.
4 points, man. Come on, 4 points. Oh, man.
Friends, it's always fun to hang out in the Llama party. Thank you so much for joining us. Of course, DeFi Advisor and Sam and Wireshark. Where can people find you?
Discord, sir, or Telegram. CVG Wireshark. Wireshark CVG.
Nice. Can you give us a bit of background real quick on what is that Wireshark image? What's the story with the Wiresharks?
Is he there?
I think he's muted.
Wireshark, you muted?
That's a Garrett, isn't it?
Come again?
It's a Garrett.
Garrett.
Looks a bit like me. The teeth, the fangs.
I think he meant with the token on mute.
Might be. All right. Well, that's a good time to sign off as any. Friends, touch grass. We'll see you next week with Liquity on day 1, Monday.